Okay, let's look at the calendar. It is late January 2026. And if you have been watching the financial charts for, the last 4 weeks, you might be wondering if you're hallucinating.
I think a lot of people are.
Because we aren't just seeing a bull market. We are seeing something that, it just defies physics.
It does.
Imagine for a second you took $100, just one crisp bill at the start of the month, and you threw it into a digital asset called Fartcoin.
And yes, that is its actual name.
That is the actual name.
It sounds like a joke from a bad dystopian novel.
It does. But if you had done that, you wouldn't be laughing. You'd be looking at a portfolio worth closer to $100,000 today.
$100,000 off $100.
This isn't a fever dream. This is the reality of the meme coin supercycle that has absolutely exploded to kick off 2026.
It is easily the most disorienting yet financially significant start to a year I think we have ever seen in the crypto space.
So that is our mission today. We are going to deep dive into this madness. We have a massive stack of sources market data from CoinGecko and CoinDCX, technical charts from BN Crypto that are just flashing all sorts of colors.
And some fascinating reports on the influencer economy behind it all.
Right. We need to figure out, is this a rug pull waiting to happen, or has the world just decided that vibes are a valid currency now?
That is the core question. We need to decode whether this is a sustainable shift in how value is created, or if we were just staring at the loudest, most colorful financial bubble in history.
Okay, so to wrap our heads around this, we have to look at the scoreboard. What are the raw numbers telling us?
The numbers are staggering. If you pull up the CoinGecko data for this week, the total market capitalization for meme coins has hit approximately $45.1 billion.
$45 billion. Let's put that in context.
Right.
That is bigger than the market cap of some major S&P 500 companies. We're talking about a sector worth more than established airlines or hotel chains.
But instead of planes and real estate, the assets are, cartoons.
Essentially, yes.
But here is where it gets interesting. It's not just a chaotic mess of random tokens anymore. A hierarchy has emerged.
Okay.
You have what the analysts were calling the blue chips of nonsense.
I love that phrasing. Blue chips of nonsense. So we're talking about the original dogs, Dogecoin and Shiba Inu.
Correct. But the narrative around them has completely changed. Back in, say, 2021, these were the rebels. In 2026, they are effectively the establishment.
The establishment.
Look at Dogecoin. It's sitting at a market cap of around $21.9 billion. It's not just surviving, it's leading.
But is it leading because of utility, or is it just, brand recognition? I see in the notes here that you can buy Tesla merch and movie tickets with it.
That integration is part of it. Being able to use DOGE at AMC theaters via BitPay gives it this veneer of being a real currency.
Right.
But the real driver right now is speculation on financial products. There is this massive narrative about a Spot Dogecoin ETF.
The ETF.
Exactly. The SEC pushed the decision to early 2026, and the market is pricing in the possibility that Wall Street pension funds might soon be able to buy exposure to a Shiba Inu dog meme.
That feels like a watershed moment. If an ETF gets approved, it stops being a joke and starts being a line item in a 401k.
That is the gamble. And then you look at Shiba Inu, the second in command.
Yeah.
They have taken a completely different route. They aren't waiting for Wall Street. They're trying to build their own Wall Street.
Right. I was reading about Shibarium. It sounds like a sci-fi city.
In a way, it is. It's a layer 2 network. They have their own decentralized exchange, Shiba Swap, and they are pushing NFTs. They are trying to pivot from a meme to a legitimate software ecosystem.
So they're building things.
They're building. And they also have a burn program where they destroy tokens to reduce supply.
Yeah.
They're trying to engineer scarcity to support the price.
So SHIB is trying to act like a tech stock, and DOGE is trying to act like digital gold.
That's a great way to put it.
They've gone corporate.
In a sense, yes. They are the safe plays in this sector, which is ironic given how volatile they still are.
Yeah.
But the real explosion in January 2026 isn't happening with these legacy assets.
No.
The 100x gains are happening downstream on a completely different infrastructure.
This brings us to the new guard. And the common denominator here seems to be the blockchain they are built on. It's not Ethereum anymore, it's Solana. Why is everything moving there?
It comes down to friction. Ethereum is secure, but it can be slow and expensive. Solana is the opposite.
Right.
In this 2026 run, Solana has become the high-speed rail for speculative assets. It's fast, and the fees are negligible. This is crucial because when you are trading meme coins, you are often doing high-frequency trades with smaller amounts of money.
You can't pay $50 in gas fees for a $100 trade.
Exactly. You can't. So Solana lowered the barrier to entry for gambling.
It didn't just lower it.
It removed the friction entirely. Platforms like Pump.Fund, which is all over our data sources, have gamified the issuance of tokens. Anyone can launch a coin in seconds.
Cool.
And the biggest winner of this shift is Bonk.
Bonk. I see this name everywhere. It's up, what, 54% just since New Year's?
At least it's cracked the top 5 meme coins.
Mm-hmm.
But you have to look at why it succeeded. It wasn't just a random launch. Bonk started as a fair launch airdrop to Solana validators and developers back when the chain was struggling after the 2022 collapse.
So it was a reward for the people who stuck around when things were bleak.
Exactly. It was a thank you note that turned into a multi-billion-dollar asset that generated immense loyalty. It has a community that feels like they own the network's success.
Okay, so that's Bonk. Contrast that with PEPE. The source material describes PPE as pure meme momentum. That sounds simpler.
It is simpler, and that's its strength. PEP doesn't pretend to have a blockchain. It doesn't pretend to have a decentralized exchange.
Just a picture of a frog.
It is an honest acknowledgement of financial nihilism. It creates value solely because people recognize the frog image.
It's basically monetized fame.
It's the distillation of the internet attention economy. And in early 2026, that attention is worth a lot. It's up 70% in some metrics. It's volatile, sure, but it captures the zeitgeist perfectly.
Speaking of the zeitgeist, this is where the deep dive gets really weird. We have to talk about the absurdist trend.
Right.
I thought I had seen it all, but then I read about the AI meme sector.
This is the frontier. We are seeing a convergence of 2 massive bubbles, artificial intelligence and crypto.
And the poster child for this is Fartcoin.
Fartcoin.
I'm sorry, I have to ask, is there any reason for this to exist other than the name?
Well, technically, it's a parody token that utilizes fart sounds on transactions. But if you look deeper, the valuation, which neared $289 million,
$289 million.
isn't just about the joke. It's linked to the Truth Terminal AI.
Truth Terminal. That sounds like a bad sci-fi movie villain. What is it?
It's an autonomous AI agent. The narrative here is that AI agents are becoming market participants. They are promoting, holding, and even trading these tokens.
Wait, really?
People are buying Fartcoin not just because it's funny, but because it's a bet on a future where AI drives culture.
So we have robots shilling fart jokes, and people are valuing that at $250 million.
It's high-tech absurdity, but it signals a shift. The memes aren't just static images anymore. They're becoming interactive and algorithmic.
And if AI wasn't enough, we also have politics. Politify.
Of course.
This feels inevitable given the election cycle dynamics, but the numbers are huge. The official Trump token, ticker Trump. This is the first time we've seen a celebrity coin actually stick, right?
It is. Usually celebrity coins crash and burn immediately, but this one has held a market cap around $350 million.
Why?
The hook is that it promises real-world utility, specifically access. The sources mention the gala at Trump National Golf Club for top holders.
Okay, but let's pause there. Is that a contract? Like, if I buy the coin, am I legally guaranteed a dinner? Or is this just a marketing vibe?
That is the gray area. In unregulated markets, these perks are often just promises. And we have to look at the CoinDCX report carefully here.
Yeah.
Regulators have flagged this sector for pump-and-dump risks.
Well, yeah.
There are massive ethical questions about monetizing political fandom this way.
Right. It feels like it opens the door for massive conflicts of interest.
It does. But the market doesn't seem to care about the ethics right now. It cares about the volatility. It's a way for people to bet on the candidate's popularity, like a prediction market, but with more leverage.
And significantly more risk. Speaking of betting against the system, there's one more token in this segment, SPX 6900.
The anti-establishment play.
The name is obviously a riff on the S&P 500.
It's a satire of the entire traditional financial system. Their slogan is the stock market for the people.
So the idea is...
It's basically saying the S&P 500 is rigged for the elites, so let's make a fake version that goes to 6,900.
It's financial protest art.
It is,
Yep.
but it's powered by sophisticated tech. They use AI-driven market prediction engines to try and capture bullish momentum.
Ah, so it's not just a joke.
It's wearing a clown nose, but underneath, it's using serious algorithms to trade.
That seems to be the theme of 2026.
Yeah.
Wearing a clown nose, but with serious algorithms. But look, we've talked about the moonshots. We need to talk about gravity.
We did.
Because looking at this crypto report, there are some flashing red lights on the dashboard.
We absolutely need a reality check. When you see assets going up 50%, 70% in a week, the physics of the market dictate a reaction. The technical analysis is showing clear signs of exhaustion.
Let's look at the case study of a coin called Useless.
Very honest name.
It gained 78% in the first 4 days of the year. If you were holding that, you'd feel like a genius. But what does the chart say now?
The chart says danger. It's facing a massive risk of profit taking. If it drops below the $0.0950 level, the support collapses.
And what does that mean?
This is the classic stairs up, elevator down scenario. The early buyers, the insiders or lucky snipers need liquidity to cash out. If you are buying now, you are likely the exit liquidity.
Exit liquidity. That is the phrase every crypto investor dreads hearing. You're the bag holder.
Precisely. And it's not just the small coins. Look at Brett. It surged 45%, but now it's hitting a supply block between about 2 cents and 2.1 cents.
Explain supply block for us. Is that just a fancy way of saying people are selling?
Think of it like a wall of sell orders. There are a lot of people who bought at that price previously and are desperate to break even, or people who set automatic sell targets there.
So it's resistance.
It's a huge wall of resistance. Every time the price hits that level, a wave of selling hits the market, pushing the price back down. Brett is struggling to break through that wall.
And then there's Bonk. We praised it earlier, but the technicals look a bit scary now. The report mentions the RSI is above 70.
It is.
I always compare RSI to a car engine.
That's a good analogy.
If your tachometer is in the you're redlining, you are going fast, but you are also about to blow a gasket. Is that what RSI over 70 means?
That's exactly it. RSI stands for Relative Strength Index. When it crosses 70, it means the asset is overbought.
Overbought.
It implies that the buying frenzy has exhausted itself. Everyone who wanted to buy has already bought. Who is left to push the price higher? Statistically, a correction usually follows to cool the engine down.
So if you're FOMOing into Bianco right now because you saw a tweet, you are buying a car that is already smoking under the hood.
You are buying at the point of maximum risk.
But why do people do it? Why do they buy at the top? This leads us to the hype machine.
Right.
Because these trends don't just happen in a vacuum. There is an entire industry designed to make you click buy.
This is the influencer economy, and in 2026, it is more industrialized than ever. We have a report here from Coinbound that breaks down the top influencers. It's important to understand that these aren't just guys with webcams. They are media companies.
Let's name names. Who are the big players moving these markets?
Well, you have channels like Crypto Banter. Their role is narrative setting. They live stream breaking stories, creating a sense of urgency.
So when they talk about a new narrative,
Thousands of listeners react instantly. It's the CNBC of the meme world.
right?
Then you have BitBoy, who targets a broader, perhaps newer audience, focusing on the AI crypto angles we discussed. And you have Crypto Kirby, who does this very high-energy, screaming technical analysis.
I've seen the thumbnails. Emergency, Bitcoin to zero, or
Yep.
1000x incoming.
Exactly. It triggers that lizard brain panic.
It does.
That is the design. But you also have to look at the invisible hand. The report mentions Coinbound itself. They're a Web3 marketing agency. Their entire business model is hiring these influencers to talk about specific projects.
So when a listener hears their favorite YouTuber talking about how great a new Dogecoin is, that might be a paid placement.
It is highly likely. And this is the double-edged sword. On one hand, these influencers bridge the gap. They explain complex things like how to use Solana or what an AI agent is. That has value.
But on the other hand,
They are manufacturing liquidity.
they're manufacturing demand.
Yes. If a channel with 1 million subscribers says, this is the next 100x, the price will go up simply because the audience buys it. But once the buying stops, the price crashes.
And the influencer has often moved on to the next coin by then.
They have.
So how does a regular person navigate that? Do you just mute them all?
No. But you have to filter the signal. Look for educational explainers. If a video is teaching you how a protocol works, that's good. If a video is giving you a specific buy signal or a price target like Fartcoin to $10, that is marketing.
Look for the teacher, ignore the cheerleader.
That is the best rule of thumb.
So we've covered a lot. We have the blue chips trying to be serious, the Solana ecosystem making gambling frictionless, the rise of AI and political absurdism.
And the technical signals warning us that the engine is overheating.
It is a perfect storm.
It is.
If we zoom out and look at this $45 billion market, what is the big takeaway? Is this just a casino or something shifting?
I think we're witnessing the complete financialization of culture. The supercycle isn't about technology, it's about attention.
Attention.
In 2026, if you can capture attention, whether through a political rally, a funny frog, or fart joke, you can monetize it instantly on the blockchain.
It's like the stock market and TikTok had a baby.
And that baby is very volatile. We have to respect the warning signs, the overbought signals, the regulatory risks around tokens like Trump, the supply walls. This market is driven by sentiment, and sentiment is fickle.
It's a mix of financial nihilism, the idea that nothing matters, the system is broken, so let's get rich off the absurd, and high-risk speculation.
It is, and for the listener, the key is to observe it with curiosity, but act with extreme caution. Understand the mechanics, understand the liquidity flows, but don't let the memes blind you to the math.
I think that's the perfect place to land. We are living in a world where a digital token based on a fart sound is worth nearly $300 million.
That is a hard fact of 2026.
It is a fact we have to live with.
We do.
So I want to leave you with a thought. If attention is the new gold standard and memes are the mining rigs, have the rules of finance changed forever?
Or is this just the loudest, funniest, most ridiculous bubble we have ever seen, waiting for a pin to pop it?
That is the multi-billion-dollar question. Thanks for taking the dive with us. Stay curious.
And keep your head on a swivel out there.